And let's talk about what the technical day is looking like. Kunal, hi, morning. Let's start off with you. IT, yes. Couple of the FMCG plays, yes. But other than that, the index refuses to budge.
Yeah, so I think slowly and steadily we are moving up higher. The only good part is that the sector mix is improving day by day. We were discussing that if IT starts to make a comeback, and maybe if the other sectors like real estate, if they start to make a comeback, you will have a lot of better mix in terms of sectors, which could push the index gradually up higher. Yes, the momentum seems to be missing because we are not seeing any major addition on the open interest front for the index futures, both the Nifty as well as Bank Nifty. So I think day before yesterday, when the market showed signs of some comeback, the open interest dropped by 1.5%, and it was a very flattish kind of an OI change for the index even yesterday. So that I believe could be the only missing point for the markets to get back its momentum. But when you see slowly and steadily sectors, large cap names starting to make a comeback, short covering comes into play. And when that intent of short covering comes into play for the underperforming sectors, that eventually trickles down to the indices as well. So my belief is that we should be heading back to that 25,000 plus mark for the Nifty over the next couple of days.
Chandan, hi, morning. So what's your Nifty strategy? Are you also playing on the upside?
Yeah, good morning. Thanks for having me. Yes, in the last week, market took support at 24,400, 24,442, and after that slow and steady, the levels are shifting higher. However, we have noticed that supply pressure is clearly visible near 25,000 mark. But the good part is that every meaningful decline is being bought, even after the selling from the FIs. There are few concerns that FIs long-short ratio is below double digit of 8 to 9%, and even after that, market is holding. If market manages to hold the current zone, I believe short covering trigger from FIs could be the next cause of the leg of rally in the market. The good part is that selective sectors are doing well. Put call ratio is holding well. India VIX is below 11 marks. So all the data set up and internally indicate the bullish undertone of the market. However, upside could be limited or market may see the slow and steady move. But as of now, till Nifty holds above 24,700 marks, we are expecting the ongoing rally to extend to us 25,000 to 25,150 levels.
Okay, so that's the take on where Chandan believes the market is headed. But Kunal, in terms of some stock-specific recommendation today, what's made it to your radar? What's looking good?
So two buy calls. I'll go with a differentiated name, SRF, in the specialty chemical space. That's something which is starting to look attractive. Classic risk reward, the stock bouncing off from its 200-day moving average. But the more important chart when we look at pattern which we look at on the chart for SRF is a classic inverted head and shoulder pattern. And it's almost like a 100 to 150 point a pattern for SRF. The breakout point is at 2950 mark, just a smudge below its previous close for the stock price. I'm expecting that breakout for the stock over the next couple of days. Would suggest a buy with a target of 3050. Stop loss could be kept at 2870. And IDFC First Bank, I think it's a classical chart in the making, cup and handle kind of a breakout. The breakout point about 72 mark where the stock has crossed over the last couple of days. Classic consistency for the stock over the last 1 week, where you've seen good volumes on days when the stock has done reasonably well, and then more of tepid volumes when the stock has gone through a consolidation. So I would expect a very strong momentum surge in the stock in the near term. 78 as a target for IDFC First Bank, stop loss at 71.
All right, so those are the buy calls coming in from Kunal. But Chandan, what about you? Which are your stock recommendations?
Yeah, so my first trading idea will be buy on Dr. Reddy. We have seen selective pharma counters are doing well and witnessing buying interest. Earlier we recommended Glenmark, and now it's time for Dr. Reddy to start the next leg of rally. Looking at the chart setup, the stock has taken multiple support near 1250 marks, and on last day it gave a decisive close about 1285, and that is the consolidation breakout of last 15-20 days. The stock is holding well with rising trading volume, and we are witnessing a positive price action on the weekly and the daily chart. So expecting some uptick in the counter, one can buy with support of 1265, and this pharma name has potential to rally to us 1340. Second trading idea, that is buy on Titagar Wagon. Selective railway related counters started to witness buying interest, and I believe bottom out approach is clearly visible. In fact, on the daily chart, a rough inverse head and shoulder pattern is visible. It surpasses 50-day exponential moving average after 30 trading sessions, surpassing its falling supply trend line with surge in the trading volume. So expecting further swing in the counter, one can buy with support of 865, and Titagar Wagon from railway space can head towards 925 levels.
Oh yeah, most of these were buzzing names, and railway is clearly led by Titagar, did make a bounce back once again.